Here's what's coming up on your horizon. Well, we begin our year and our 10th season here on Horizon by looking at our economy. We'll tell you what sectors are growing and what areas are slowing down.
We have a bit more federal government than the nation. Of course, that's taken a bit of a hit this year. Energy activity has also slowed in terms of employment and drilling.
Our Andy Barth looks at some economic trends down on the farm.
What goes up must come down, but that may not be the case for cattle and wheat prices, and we'll tell you what that means for your dinner table.
And we end our show with my conversation with former White House Press Secretary Ari Fleischer. We're asking, can the federal government be fixed?
Yeah, I just don't know how anybody can look at the history of our country and the things that we've had to go through and not be optimistic.
That answer and much more coming up on your Horizon. Stay with us.
Oklahoma Horizon is made possible by the Oklahoma Department of Career and Technology Education.
Oklahoma's investment in career tech provides more than nationally recognized technology education and training. It produces solid financial returns for the state's economic future. Oklahoma Career Tech, elevating our economy.
And the Oklahoma Department of Agriculture, Food, and Forestry, helping good people grow good things. And now, from the Career Tech Studios in Stillwater, here's your host, Rob McClendon.
Hello, everyone. Thanks for joining us here on Horizon. Well, the national economy ended the year on a high note. Unemployment hit a 5-year low, beating expectations and creating over 200,000 new jobs. Consumer spending also grew for the past 2 months, exceeding forecasts. Good news, any way you cut it. But can it be sustained? And how is Oklahoma doing compared to the rest of the nation? We begin our show and the year with our annual economic outlook.
2013 was a good year for Oklahoma's economy, but not as good as it has been.
Well, most of the softness has occurred in the energy industry, and it looks to me that it's in the non-metro portion of the state.
Dan Rickman is an OSU economist and says he expects to see a pickup in job growth of about 20,000 new jobs in 2014. That follows a slowdown last year in the rapid growth of our state's energy jobs due to recent advances in technology.
Where we've had an increase in productivity, we don't need as many workers in terms of the number of rigs and wells being drilled. Technology has always been that way, but it always creates, wherever it displaces something, it always creates other opportunities.
Rickman was one of several speakers outlining where the jobs will be in 2014 at the annual Economic Outlook Conference. Chad Wilkerson heads the Oklahoma City branch of the Federal Reserve Bank and says while state unemployment remains drastically lower than the national rate, for the first time since the recession, Oklahoma job growth lags that of the nation.
We've been growing a little bit slower than the country as a whole. We have a bit more federal government than the nation. Of course, that's taken a bit of a hit this year. Energy activity has also slowed in terms of employment and drilling. Production is still pretty strong. Now, nationally, the economy has continued to grow. Unemployment has come down, but we're not expected to get back to what you might consider full employment levels until at least 2015, 2016.
Wilkerson says that's because the state remains highly dependent on energy and aerospace jobs, two sectors that have slowed, but for different reasons. Energy is a global commodity and one that rises and falls due mostly to factors outside our state borders. But for aerospace, where many of those jobs are federal, the lagging growth in the sector is due in great part to what is going on in Washington.
It continues to be a good amount of uncertainty about fiscal policy. It seems like fairly low odds of another government shutdown or sizable sequestration, but I'm an economist, not a politician, so I really don't know how to guess, and it makes it difficult to forecast, not just as an economist, but it makes it difficult to forecast as a consumer or a business as well.
Sort of a self-inflicted wound, courtesy of Congress. Despite such negatives, both Rickman and Wilkerson are positive on the trajectory of our economy.
And it's done well despite all the setbacks from the government sectors. The private sector's been doing well, and it's continuing to gain momentum despite what government might be doing.
I think in Oklahoma there's still pretty solid fundamentals. Energy is still our driving sector here. Prices are still solid for oil. They've increased probably even more than expected for natural gas, even though they're still fairly low. We still have a number of energy headquarters of businesses that do activity not just in Oklahoma but other places. That's solid. A risk would be federal government. We do have a good amount of federal government, especially defense. So that would be one risk, but I think overall the outlook is fairly good.
And it is a recovery that for many Americans is proceeding at a very uneven pace. According to a Washington Post Miller Center poll, there is still plenty of anxiety among workers over losing their job. If you will, let's take a look at some numbers. When it comes to job security, Americans are pretty evenly divided into thirds. About 32% worry a lot, 30% a little, and 38% not at all. But those numbers change pretty dramatically when you look at household incomes. Now, 54% of workers earning $35,000 or less worry a lot about losing a job, 21% a little, and compared to 25% that don't worry at all. But look what happens when household incomes rise. For those making between $35,000 and $75,000 annually, those that worry a lot about losing their job, well, it drops down to about 30%. And when incomes climb above $75,000 a year, people are feeling even more financially secure, with just 17% stressed out over job loss, while almost half of high-wage earners surveyed report no worry at all about losing their job. Now, later in our show, we'll talk more about the impact the constant partisan infighting in Washington is having on our national and state economy. But when we return, a closer look at our rural economy.
You're watching Oklahoma Horizon, featuring some of the good things that are happening in the great state of Oklahoma.
Well, Oklahoma's farm economy remains strong despite last year's challenges from the weather. That, combined with lots of energy activity in rural Oklahoma, is helping the bottom line outside the city lights. Joining me now is our Andy Barth.
Well, Rob, there certainly is a light at the end of the dry tunnel for Oklahoma. After drought-shattering rains fell on much of the state, agriculturalists have a lot to look forward to this year. Oklahoma agriculture has seen its share of hardship in the last several years, from dry conditions to devastating tornadoes. Farmers haven't seemed to catch a break. Yet Oklahoma Secretary of Agriculture Jim Reese says Oklahoma ag is back on the rise.
Currently we're doing pretty well. You know, if you take the last 20 years and pull out the last 3, commodity prices have been close to double the previous 17 years. So despite the drought, which, you know, certainly had a detrimental effect on agriculture, now we've had 3 pretty good years economically for agriculture in Oklahoma.
While Oklahoma's ag industry is diverse, it's no contest when it comes to the top 2 commodities, wheat and cattle.
The beef industry right now is in a very unique position.
Darrell Peel is an economist at Oklahoma State University and says thanks to several years of abnormally dry conditions, the cattle population took a hit.
We have 60-year lows in the cow herd, actually about a 70-year low in total cattle numbers in this country. So, you know, the supply fundamentals are the major driver in this market in terms of where we are.
And with fewer cattle numbers, you will pay more for that juicy steak. According to the USDA, consumers can expect a 3% increase for beef at the meat counter.
We're just out there in kind of uncharted waters in terms of all of these supply-driven things. It raises demand questions about, how the market will handle this, how consumers will handle this.
Yet things are looking up, thanks in part to a wet year for the majority of Oklahoma, giving hope to cattle and their owners.
There's lots of challenges on the one hand, but an awful lot of opportunity.
And while beef prices are expected to go up, grain prices are projected to remain flat in 2014.
Looking out to next June, prices in June, July, and into the 14-15 marketing year, I think wheat prices are going to stay relatively close to where they are now. Where I have that 6 to 9.50.
Kim Anderson is with OSU's Ag Econ department and says while price projections look favorable for Oklahoma wheat growers, there is no match for Mother Nature.
Oh, weather determines price. So weather's the reason we have a short crop this year. Weather's the reason we have relatively large crops. And if you have large crops, you have increased supply, lower price. If you have bad weather, you have lower supplies and a higher price.
So essentially, like any commodity, agricultural prices are dependent on supply and demand. And while meat prices are up and supply is down, another good growing season could keep grain prices flat. Rob?
So if grain prices do remain stable, what will that mean for consumers?
Well, Rob, as long as the prices for grain stay where they are, consumers can expect to see groceries like flour, bread, and pasta remain stable.
All right. Thank you so much, Andy.
You're welcome, Rob.
Well, a stronger national economy has the Federal Reserve Bank scaling back the amount of money it's injecting into the economy each month, fueling speculation. We could see everything from higher interest rates to lower land values. I sat down with Nathan Kaufman, the head of the Omaha branch of the Federal Reserve, to talk about that and other trends affecting our rural economy. Well, Nathan, Oklahoma City continues to lead employment growth here in the state. In some of our non-metro areas, we're starting to see a little bit of a fall off in employment. What do you think that might be?
I think there's a couple things specifically in Oklahoma. In the rural areas, you think about commodity prices. And in particular, you look at oil prices as an example, natural gas prices. You also look at crop prices. When you look at those prices and you get into the details, you start to see that prices have been falling. And they are expected to potentially fall going into the next year or two. That's really been driving some of the profitability in those sectors and really what boils down to some of the employment gains in rural areas and income growth in those areas.
So we're very proud of the diversification we've been able to do really since the 80s when we had a real down time here in Oklahoma. Yet are we foolish to forget the importance that two commodities play, ag and oil, in the state's economy?
I think that it's something obviously to think about, and any economy would want to be diversified to the extent that it can be. The dangers that are out there right now are particularly thinking about the agricultural side. Crop sector farm incomes have been very, very high the last few years. Now obviously the livestock sector has been a different story. There's been some challenges there with drought and so forth. But the challenge going forward is that incomes in the ag sector and in a lot of those rural areas are expected to be a little bit lower. And at the same time, you've got a lot of unconventional energy reserves that are being tapped that are driving crude oil and natural gas prices down and limiting further production there. And so you've got a couple of key commodities for the Oklahoma economy that have slowed down a little bit. And in terms of thinking about gains in the next year or two, present some concerns for some of those rural areas.
So as we transition to lower prices, whether it be agriculture or energy, could we risk another bust?
That's been a question that's been out there, to be honest, for some time, especially looking at where farmland prices have been. That's been one area where people look and see that there's the potential that those prices that are out there right now might not be sustainable. I would say that when we compare that question, thinking about the possibility of a bust with, let's say, something that happened in the 1980s in the farm sector, one of the key things is thinking about debt and leverage. In the 1970s and into the 1980s, leverage was fairly high. Today, leverage is pretty low overall, and so when we think about the possibility of a bust, that's a key component there. So there is a recognition that there's risk in leverage. Underwriting standards are obviously very different right now than they were in the late 1970s, early 1980s, so that's another point of difference. Now, having said that leverage is relatively low right now, there are some operations that are a little bit more highly leveraged. You think about some of the livestock operations that have been experiencing some hard times here recently, or you think about young and beginning farmers that are wanting to get started and have limited collateral to begin with, or limited equity to begin with. So those operations tend to be a little bit more highly leveraged, but overall, I think that people are being careful. There's a lot of people that remember the 1980s, that remember how awful that time was, and they're being careful in terms of adding new debt.
Now, we've had fairly record low interest rates. You're with the Federal Reserve Bank. Sometimes they're criticized, sometimes everyone welcomes them a lot. Do we risk with that monetary policy people not being as careful as maybe they should?
That's been something that's been talked about, is the possibility that a prolonged low interest rate environment might start to drive investors to more risky assets seeking return. So with the Fed funds rate being at 0 for a relatively long period of time here, there's thoughts that that may start to drive investors to other areas, risky assets, potentially looking at farmland as an investment, and then thinking about where farmland prices have gone the last few years. There's questions about how much monetary policy and low interest rates are contributing to that, with the key being that eventually interest rates are expected to rise, that would present a risk for those segments of the economy where there may have been more investments in the last few years.
In terms of our rural economy, what wild cards do you see out on the horizon?
I think one of the big things is what's happening in fiscal policy, to be honest. And there, we hear a lot about uncertainty in today's economy. And you can write out a number of different possible cases for uncertainty, whether it's something that's coming from what's going on in the Middle East, or whether it's the government shutdown or the deficit, and some of those things that are out there. In rural areas, it might be the Farm Bill. There's just a lot of uncertainty out there, and it has really hindered, from what we see and what we hear, it's hindered decisions to plan for the long term. Businesses are reluctant to hire, they're reluctant to invest, and so that's in some ways hindered then job growth, and in rural areas in particular.
So Nathan, I guess the elephant in the room is what makes now different than the bust we did see in the 1980s?
I think one of the main things that I would try to emphasize is when we think about the potential for a bust in the next couple of years, if you think about lower income or even potentially beyond 2015, and thinking about comparing that with the 1980s, the key there again is leverage. And so when you think about how to protect against something like that, it would be maintaining working capital, maintaining levels that you could be able to absorb a shock that might come in the short term, where that leverage in the 1970s and 1980s was a little bit higher than what it is today. Thinking about maintaining working capital is one protection against that.
Thank you for your insights.
You're welcome.
Want to share something you've seen here today? Well, all of our episodes are streaming on our YouTube channel at Oklahoma Horizon TV, or you can subscribe to our weekly free podcasts on iTunes. Well, of the economists we talked with today, 201, they were positive on our economic outlook, but with one single similar caveat. Our economy should continue to grow if Washington lawmakers will just stay out of the way. Infighting in our nation's capital has not only sent lawmakers' job approval ratings to record lows, it's also costing jobs. According to a study conducted for the nonpartisan Peter G. Peterson Foundation, in 2013 alone, political uncertainty cut GDP growth by 0.3% and pushed the unemployment rate up more than a half a point higher than it would have been with more effective government. That happens because troubling news out of Washington tends to push stock prices down and interest rates up, and according to the study, undermining wealth and raising private borrowing costs. So consumers and businesses spend and invest less as a result, and that equates to about 900,000 lost jobs in 2013 thanks to the partisan infighting, something Ari Fleischer is well aware of.
All of Iraq.
As the former White House press secretary for U.S. President George W. Bush, Fleischer has seen his share of budget bickering and political standoffs, a brinksmanship many believe has made our nation's capital dysfunctional. I sat down with the former press secretary and current communications consultant to talk about whether our federal government can be fixed.
Now, working on the inside of a presidential administration, are you sometimes struck that when bad things happen, the limits of even the most powerful office in the world has?
Well, what really you learn after you spend time in Washington, and I spent 21 years there, is under our constitutional system, the framers meant it when they say we're a system of checks and balances. The president does not have universal authority, and that's a healthy, good thing. Because what it forces you to do is take problems into the public eye. And if something's not going right, if there's something difficult that you need to overcome, under our system, you've got to make it a public issue. You've got to go to the country. You've got to go to the public. And hopefully then the public puts pressure on Congress, the House, and the Senate so they agree with the president. You know, for all the flaws, for all the difficulties, for all the slowness and the fighting that creates, I wouldn't trade it for anything. It's how you create consensus in our country. The absence of that would be a monarchy. The absence of that would be a dictatorship. And that's just not how our country is built.
Now, you said the word consensus. You know, since you've left politics, or at least being on the inside of politics, it seems like, at least on the federal level, consensus has been hard to come to.
Well, and even when I was there, consensus was hard to come to. I think there's been a real breakdown in that basically since Vietnam and Watergate. I still will argue that those were the two signature events that changed the government's relationship to the public. And ever since then, the press has been more cynical as opposed to skeptical. The country has been more vigilant about making sure the government was doing the things that they wanted them to do. And then the advent of modern communications with Twitter and with cable TV has really created a polarization that's instant. Before, you used to be able to say something, people might reflect on it, think about it for at least a few hours, and that would get reported on the evening news with Dan Rather that night. Now everything is instant analysis, and it's pretty vigorous. That's led to a fraying as well. But what's also led to is a real demand from the American people for somebody who can finally rise above. Someone who just through the power of principle and persuasion can unite people and carve out what's arguably the center of this country. I'd call it in between the 20s on a football field. And if you can do that, this country wants it, and they want it so badly. So I'm an optimist about it. We just have to hope the right person emerges and who's got that ability, because you hear it from the public. The public is sick of the fighting. The factions, the bases in each party, are the ones who are really pushing for the fights in many cases. But there's a larger center out there that I still think can be put together.
What would you say to those who would say that it takes both sides to be able to compromise, to be able to get something accomplished?
Well, our nation was built on compromise. The only reason the nation's capital is in Washington, D.C. is because the northern states and the southern states wouldn't form a constitution unless they could agree where to put the capital. The only reason we have a Senate is because of compromise. The smaller states wouldn't agree to create a government unless they had something to counterbalance the more populous states, hence the Senate. And we've always been that type of country. What's happening now, though, is that the issues, principally the debt, are so massive and so big. Many people have come to Washington saying the old compromises will no longer work. That you scratch my back, I scratch yours is exactly what's gotten into this mess in the first place. And this is why compromises mean I'll spend here and you spend there and we'll call it a day. We're in an era of big issues, and that's one of the reasons there's strain on the system. It's kind of like a family. You know, if a family gets so deep in debt that finally they have to say, we need to sell a car, we need to give something up, you're not going to be able to do the things that we had talked about doing. Something's got to give. That creates strain, creates pressure. Nobody wants to give things up. We're in an era now that if we don't figure out how to do that, our children, our grandchildren are going to have a much harder time being successful. And no generation wants to leave the next generation worse off. I think that's why you have a stressed system right now.
Yeah. Final question. You said you are an optimist. What are some of the things you're the most optimistic about?
You know, I just don't know how anybody can look at the history of our country and the things that we've had to go through and not be optimistic. We always figure it out in the end. And we're a noisy democracy. We can be a slow and sometimes an incompetent democracy. But at the end of the day, this country gets it right. And we're just going through one of those phases now, which is a multi-year phase, unfortunately, where the fights and the rancor is bigger than the ability to agree. But for most of my time in Washington, that was not the case, and it doesn't have to be the case. You know, even George W. Bush, when he was extraordinarily unpopular, he was able to reach agreements with Democrats in Congress. They were able to reach agreements with George W. Bush. And you know, I think times pass, and you know, I always think that one of the great strengths of a chief executive, whether they're a Democrat or Republican, is that they have had experience as a governor or they've had experience running organizations. That's another business lesson. And I think that's, when you have that, the system does tend to work and work a lot better.
Mr. Fleischer, thank you for your insights.
Thank you.
You can keep up with us throughout the week. Just head to okhorizon.com, where you can see more of any of our stories, read our reporters' behind-the-scenes blogs, see what others are saying about us on Twitter, and face the facts with our regular updates. So reach out and touch us anywhere and anytime.
Next time on Oklahoma Horizon, growing concern over a growing skills gap in the state and the damage that could have on our economy.
And what we found is that 50% of Oklahoma's population has a high school degree or less. So we're looking at a population that may be looking for a job, but it doesn't exist because they don't have those skills.
Closing the skills gap on Oklahoma's show for the Heartland, Oklahoma Horizon. Well, that is going to wrap us up for today, but you can see more of any of our stories on our website at okhorizon.com. You can watch us on the go with our weekly podcast on iTunes. Follow us throughout the week on Twitter at OK Horizon TV, or just become a Horizon fan on Facebook. I'm Rob McClendon. Thanks for watching. See you back here next time.
Horizon is made possible by the Oklahoma Department of Career and Technology Education and the Oklahoma Department of Agriculture, Food, and Forestry, helping good people grow good things. Copies of today's show are available on our website, okhorizon.com. Thank you for watching Oklahoma Horizon.